Hello, traders. I hope all of you are doing well. Welcome back to Your Nifty Guy. In trading, one of the biggest advantages we can give ourselves is proper planning. The market will always be uncertain, but when you walk in with a well thought out plan, you remove the guesswork and the emotional decisions. That's why successful traders say, plan the trade and trade the plan. In today's video, I'll take you through my complete thought process, the key levels I am tracking, and the scenarios I am preparing for in tomorrow's Nifty session. Stick with me till the end because having a plan could be the difference between just surviving the market and actually thriving in it. And if you find this video helpful, don't forget to like the video, subscribe to the channel, share it with your trading friends, and put down anything that you might have to say in the comments box. And on that note, we'll start directly with the video. Right. So on a higher time frame, what we had discussed yesterday was that we are in a higher high, higher low, sorry, lower high, lower low formation, which is kind of a downtrend scenario. And that was the reason why our bias was on the short side. And we had planned that below this particular low with a pullback, we will be taking a short trade. Now, markets opened flat, which I told you would be the best possible scenario. Markets did go down, gave us a closing below our levels. This was the alert candle. Now, around here, the markets did give a manipulation move wherein markets formed a kind of double bottom and moved up, right? But then, as soon as this low, now try to understand when the market is forming a double bottom around here, will we take a long trade? No, we are very close to, right? So this is the bottom borderline of the support that we were at, right? We are very close to it. The structure on the higher time frame is bearish. So will we take a trade on the long side around here? Absolutely not. I had clearly told no long trades before this particular swing is taken out, right? So this is here where the market actually invited buyers, and all those people who had created and taken long entries around here were trapped as soon as this particular low was taken out. So this was the first trade for me where I had taken an entry as soon as this particular low was taken out with my stop loss right around here. Markets went in my favor, gave me a pullback. I trailed my stop loss from this to this particular swing high, the red candle at 1220, the high of the red candle. Markets again created a new low, but with a RSI divergence, right? Till around here, there was no RSI divergence. See, when this low was formed, RSI also formed a new low. But with this particular low, RSI formed a higher low, and that was the cue that okay, markets might kind of reverse. So I decided to stick to my original SL, not the original but the trailing stop loss of this, the high of this particular candle. And as soon as markets came around here, I exited the trade at cost, right? So the first trade was exited at cost. Post this particular thing, again try to see markets broke out of this, broke up above this particular swing, took the essence of people who were short, again came down, formed a higher low, right? This was the prior low. Markets formed a higher low. Now, this swing became again very, very important. But then again, markets went up, could not break the prior high, and then markets broke this low, right? And for safety is concerned, I took this particular low as my entry. This was a good bearish pattern forming around here. And as soon as this low got taken out, I entered in this particular candle, which I thought might have been a mistake. The original stop loss was above this particular swing, and I stuck to it for some time. The markets were extremely, extremely volatile, but then sticking to the trade and not actually exiting early because of the volatility. I waited for the markets to either take my stop loss or to move in my favor. Actually worked for me, and wherein markets eventually gave a very, very good fall. I exited my trade post 3 p.m., right? Somewhere around here, 3:15 or 3:14 or somewhere in 3:14, 3:15 is where I exited my trade. I do not hold any trades overnight. This was a very good bumper trade, and that was the reason I exited it. And of course, no carry forward trades for me. no BTSTs, no trades to be carried forward, all intraday trades to be wrapped up on the very same day. Now, why could I take the short trades with much more conviction was I have been speaking about in day before yesterday's video when we were, sorry, when we were trading around these levels, when we're trading around these levels, is also when I had mentioned that below this we are short, right? And we were, we actually came much below that and we formed a sideways consolidation zone around here in which even my SL had gone. But then eventually the trade did go in our favor. So the markets will remain volatile, right? That is something which is not in your control. What is in your control is to pre-plan your trades and then sticking to those basic, simple plans. And that is what I did exactly in today's market. I hope uh, the two trades that I took were extremely clear and the logic behind everything, the entry, the trailing stop loss, everything is extremely, extremely clear, right? Now comes the trade plan for tomorrow. Now there are certain ways to look at it. Again, on a daily time frame, we have got a good follow through to the selling that was coming in. Like yesterday, I had told about the candles, which were not too convincing, but today's candle is a very good candle. Now, the only point to look around here is if we actually go on a weekly time frame, we don't need this level right now. Okay, so this level has done its job for both the sides. It has given us a trade around here. It gave us a trade once we broke out above it, and it has given a trade when we have broken down below it. Now, on a weekly time frame, right? This was the last major up move which came in. So if we are to take a important fib level, what should be our important fib level around here? So we'll be taking this fib, and then we are right now at the 0.5 to 0.618 retracement of that particular level, right? So we'll color this green. On the 75 minutes time frame, markets are absolutely bearish. But then tomorrow's plan will be very, very simple. Again, say today has been a good trending day. We can expect some volatility and sideways day tomorrow. So I will keep the plan of action very simple. We'll mark today's low. And I am still waiting for that one elusive trade to show you guys. What we need is a bearish candle at the start of the day, which forms and gives us a closing below this, inviting fresh sellers. And if the high of that candle gets taken out, that is where we plan a long trade, right? So this is the trade that I've spoken about so many times. Again, I keep speaking about it every time I see that a possibility of something like that happens. Try to understand markets were trending on the downside today. There would have been many people who would not have participated in this particular down move, and they will be having FOMO, right? Fear of missing out. And once tomorrow the market goes down in below today's low, many people will be jumping into taking those trades, and that is where the stop losses will be triggering once the high of that candle gets taken out, right? So that is a simple trap trading setup that I have. Very, very rare, but then gives a very good risk reward whenever it happens. So no harm in being aware of it and keeping a watch out for it. Again, below this we are short, but then again we are at a crucial level as well, right? Now this is the weekly time frame, zero point 0.5 to 0.618 level. So uh, any positive price action around here again, but I'll not be too keen on taking any long entry for now on a 75 minutes time frame. Yes, I'll be using the 75 minutes time frame to mark out my fib levels, right? So this is the so I spoke in yesterday's video as well. When in doubt, zoom out. So on a 15 minutes time frame, you'll not be able to get a lot of swings. We'll be getting confused about these intraday swings. So that is the reason why shifting to the 75 minutes time frame, we have got this particular level, which is a resistance for us. Once market approaches this level, gives us a bearish price action, we can go short around this level and long entries to be taken only above this, right? Now, markets are behaving in a very, very weird way. So, my sincere suggestion to everyone would be to keep your trading to bare minimum, reduce your quantities for a while. Markets are not going anywhere. Once things smoothen out and are sorted, we'll be going ahead with the regular trading. But for now, we'll be sticking to it, right? So, yes. Why am I saying about the markets not giving a clear view is again on a weekly time frame, like try to recall the level that we just had on the chart, right? Now, that was a weekly level which initially markets took as resistance from. Then again, we broke up above it, but then again, we have come down below the same level as well, right? And right now, again, of this particular up move, we are at an important level. So markets are kind of clueless. I have a feeling that markets are consolidating in a very, very bigger area without a clear trend. So that is something which we have to keep in mind. So yeah, I believe the plan of action for tomorrow is very, very simple. Keep in mind to trade with lower quantities, reduce your trading activities for now. So yeah, and that wraps up today's analysis. Remember, the market rewards preparation, not prediction. The more clarity you have before the market opens, the more confident and disciplined your trading decisions will be. So take these levels, adapt them to your own strategy, and walk into tomorrow with a clear plan. If you found this breakdown useful, make sure to like the video, share it with fellow traders, and subscribe to the channel so you never miss an update. See you in the next one. Plan smart, trade smart. Cheers, guys.